Hello and welcome to my YouTube channel. So on today's insight or analysis, I'm going to be looking at gold. So this is the higher time frame for gold. I'm looking at the 1 week time frame of gold, and as I can see, the last week's candlestick, that's the blue one, it closed very much bullish, indicating that we might be going on an uptrend even for this week as well, because last week's candlestick became bullish. And remember, our target for last week, it was that liquidity right there. That was the target that we were looking to take out. And another thing that another reason why I think we are still continue or going to be bullish, what I do think is that we are going to be breaking that high. So why do I think that we are going to be bullish? It's because we can see that the overall time frame for gold, it has been bullish. It has been bullish, and we don't have a change of character. Our change of character would have been, let me do this. Our change of character would have been, let's see, could it be this low? Yeah, it's this one. For us to consider that the market might be willing to change direction or might be willing to be going down, we should probably see GBP USD come all the way, gold come all the way down, and then take out this liquidity right there, probably go up for a few pips, then go down and break, because this right here, it would have created a change of character and be willing to be going down. So that is why I think that we might be going down with gold, and I don't think there's any reason for it to come back down now, because this was our order block. It was the order block that we had. It wasn't mitigated or it wasn't touched, but we can see that the fair value gap that we have here, we had filled. Is it 50%? Yeah, it's 50% of this fair value gap, which was filled, and then the market has been going up since. So right now, we just have to see a reaction here on this key area. I'm anticipating for it to go up more. I'm more probability, right? I'm probabilizing that it's gonna go up more than it's going to go down. Let me flip for confirmations on lower time frames. I'll be going down to my daily time frame. So basically, the reason why I was on the one week time frame is because I was looking for the direction of where could it be heading to. Could it be going down to a key area like that one, or could it be going up to that key area like that one, because it hasn't been taken out fully, so we could be going into it. And then when I look at my daily time frame, we can tell and see that it has been in a consolidation. It's been playing in just in one area right there. That would be our support, and that would be our resistance. So consolidations are really not a very good way to be trading, or I wouldn't recommend trading consolidations, because you will never really know when the market is willing to break out of this consolidation. So it's always best that you avoid it. So when I come to the daily time frame, I can see that I had this order block right here. It has just been taken out right now. So there might be a few people who have entered their sells right there going down, probably feeling this fair value gap. Probably just feeling this fair value gap, and maybe just maybe trading into this order block. So I'm not going to be plotting, sorry for that. I'm not going to be plotting the last down candlestick before the sudden movement. I'm just going to be plotting the last candlestick, the last candlestick, no matter if it was bullish or bearish. And that is it right there. So I believe those who have entered their sell positions at the order block above there could be going into this order block, and that is when they are going to be bullish with it. And of course, we are going to have to go to lower time frames again. This is the daily time frame, meaning that one time frame closes after 24 hours. So we are going to have to get more confirmation with lower time frames. And another thing again, our target for last week, I had created another video and my target for that video, it was that high, and you can see that we have been approaching that high, but we haven't like necessarily reached it. So we are going to take out that high. And then another reason why I think that the market is going to be coming into this fair value gap and most possibly feeling this, touching this order block, is because right here we have a break of structure as well. So this would be some sort of a retest. Market is like retesting into the broken structure while also feeling the fair value gap, and most probably also tapping into the order block, because also again the trend is bullish. We can see that the trend is going up on that particular structure. We can see that it's going up. And then the hourly. So from the weekly, daily, we have confirmations to be looking for bullish trade, right? We have confirmation to be bullish trade. And then when we get to the 1 hour time frame, this is where we can clearly see our uptrend. We can see our highs, our lows, and everything. That's a high, another high created, another high, the highest high created there, and then down here these are lows, and all down there those are lows. So that is a clear uptrend that we can see. So right now, because we want to be trading, we are going to be looking at the most recent structure that has happened. What we can see on the most recent structure that has occurred is that we have a break of structure here going up, and you can even see the candlestick that broke the structure. It's quite a bullish candlestick. So we have that candlestick that has broken the structure. This is a break of structure, right? BOS. It's a break of structure, and for every break of structure we always have a retest, right? So I want to believe that once the market broke that structure, so this is it, it had to come back and retest. As you can see, it did come as a retest. So it didn't necessarily just react from here and go up. Why is that? The reason being is because down below this break of structure where it had occurred, we had another fair value gap right there. I don't know if it's clearly visible. Let me plot it from the chart. We have that fair value gap, and you can see that it got filled, the whole of it got filled, making it an imbalance. Making it an imbalance. So I believe that market is supposed to, let me plot the whole of this candlestick, and then this would be our order block, and we are currently on it. So we could be entering positions right here, but it's quite, I think it's quite early to be entering, but we could be entering because it can also come to this order block right here as well. Can come to this order block right there. So I think it's best to see if it's going to be breaking that area, going down, or rejecting here. And after rejecting, we want to see maybe like a momentum candlestick, and that is when we can like safely enter. And then if I refine down to my 15-minute time frame, let's go. I want to be using my session strategy. Let's see. London session is yet to be open, meaning that Tokyo session is currently running on its own. And if it's running on its own like this, that means that we are unsure of which high to be taking out or which low to be taking out in terms of the Tokyo high and the Tokyo low. So from all of this analysis, we can tell that our overall trend is being bullish. But if I was to trade on the 15 minutes like this, or maybe if I was to scalp, I would use the 15 minutes as my higher time frame, and from this I can see that the market has been in an uptrend, and then it's changed direction. We have two equal highs there making a double top. One might also assume that this is a potential head and shoulder pattern, you see, before market change direction. So I think we are going to be coming all the way to the fair value gap from the 1 hour. Let's go back to the 1 hour. Let's go back to the 1 hour. The fair value gap from the 1 hour, it's this one right here, and the order block that I see that the market might come back to it. So We are in the London session right now. We could possibly be trading this pair on the New York session. So thank you for that, and I'm done. Remember to like, share, and subscribe, please.